let's talk about time stops. I don't think time stops get a lot of love, so we're going to just go through and chat about this. Now, first of all, what is a time stop? We all know protective stop. I'm going to buy the stock at 10. If it hits $9, I'm wrong. I'm going to put a stop there. Those are great. All systems, I think, should have that, because super important. Now, what if you're doing a trailing stop? Said, okay, we all know about trailing stop. I'm going to buy the stock at 10. If it goes to 11, I'm going to raise that stop up to break even. If it goes to 12, I'll raise the stop up to 11. And I'm going to continuously move the stock as the stock goes in my direction. But what about time stops? Time stops simply just say, I'm going to exit after X period of time. A week, a couple hours, whatever it is that your hold time is. Now, first of all, why would you do that? Well, let me show you guys an example. So this actually comes from the trading room where someone was asking a question about TPR. So TPR came from our pullback algorithm. So what we're looking for in this pullback algorithm is we're looking for something that had a really strong week last week, and we're looking for it to come into a certain price that the algorithm decides based off a bunch of indicators and everything that I've tested. And we, roughly know, again, if you go to stats.trading.com, you can just click on the trade with edge. And then in here, these are all of the returns, and I update these monthly of all of the different back tests. So we're talking about the pullback strategy, so we can look at that one. And this is what's going on. I have a whole video explaining the setup and everything. So this is what's happening, and this is based off a time stop of holding for a week. So the question was, well, TPR is doing amazingly. Why wouldn't you just hold this one and turn it into a trend trade? So that's why we're making this video, because I've done testing on all of my setups, all of my short-term setups on optimal hold time. So this is the equity curve that I just showed you. You're looking for these pullbacks, you're buying, you're holding for about a week. Well, what happens if I just extend that out and say I'm going to hold for 2 weeks instead? Well, here we go. It's still good. You still make money doing it, but you're making less, right? The thing is returning less capital than if you were just taking your quick hit and moving on. So again, let's talk a little bit about time stops. So what do time stops do? Well, first of all, if there is an optimal hold time, if you're looking to, in this case, mean reversion and trend fall or pullback trading, I think can benefit from these. Trend following, let's put that in another box that's separate, because with trend following, you're basically just trying to have the stock grind higher slowly for a long period of time, and you're trailing a stop behind that. For those, I don't really use time stops, because preferably I'm in those names for weeks or months, or if the thing keeps going like Palantir is right now, I'll be in them for forever. The idea is with these shorter term trades, you're trying to get a return on capital, and you only get that return on capital when you sell. So what we're trying to optimize for is to get in, to get our money, and to get back out. So let's say, for example, I completely turn this into a trend following trade, this TPR. There's nothing wrong with that. If you like the setup and you think you got a good price on the setup, that's absolutely fine. But what you have to do now is you have to divorce this setup from the back test and from what it is that you've tested, because you've tested an optimal hold time. That optimal hold time is for a week. Now, where do time stops really come into play? Because I don't think there's anything wrong with the person saying, I'm in this great price for this trade. I like it for whatever reason. I'm going to slap a moving average on it. I'm going to try to stay as long as we stay above that moving average. Great, that's fine. Where time stops, I think, save us is not in situations like this. What time stops save us is in situations where your stock is not moving. That's the main purpose, I think, that every system should at least explore a time stop. Say you buy a stock at 10. You say, I want to get out at 9, or I'm going to use that trailing stop that ticks up $1 every time the stock moves $1. What if the stock doesn't move? What if the stock just stays between 10 and 10.50 and 10.30, and it does that for months? Well, if you don't have a moment where you say, okay, I'm in this trade long enough, I'm going to move on, you're not losing money, so that's okay, but you're not making anything. So what you're not able to do is you're not able to reallocate that capital. So I want to talk a little bit just about opportunity cost. So if you had a trade and that trade has been chopping sideways for days or weeks or months or longer, then you don't have that capital to reapply to other trades. So this is where time stops make a lot of sense. And I think it's something that people should really, really look at and really think hard about. If right, we're just going to end up chopping sideways, I could put my money somewhere else and I could set an alert for that stock and I could come out. So think about time stops. Also, think about time stops if you're negative. This is another reason that this particular setup, I'm totally okay with this person turning into a trend trade if they end up liking this for whatever reason. They think the chart's going to move higher. However, say this didn't happen, right? Again, we're right in this setup 58-ish% of the time over years. So there's going to be short periods of time where we're going to be wrong more often than we're right. It's just the way the market works. But what if this hit this price and just continued to sell and it was down there, and then they turn it into a longer term trade? That I'm not as comfortable with. So time stops, if negative, is something else that I think people should explore. I'm going to buy this stock and I'm going to give it 3 to 4 candles, whether those are daily, weekly, 2-minute candles, whatever it is. I'm going to give it a number of candles in order to start moving in my direction. And if it doesn't, I'm going to get out of the position. So you can see how time stops will actually sometimes allow you to move on with different trades even faster, because it's just putting that hard cap on, hey, I'm not looking to, um, you know, hold on to this loser for very long. Also, I'm not going to hold on to this stock that's not doing anything very long. Again, I don't think time stops get a lot of love, so I thought I'd make a video just ranting about them for a little bit. Look to apply them to your own trading. Again, whether it's day trading, swing trading, long-term trading. Are you holding on too long because you're always shooting for the moon? Are you holding on to your losers too long and you could exit after a period of time? Or do you have some dead money sitting there just not doing anything to help you?